Hello everybody, it's me, the Boss Hog. We're back with another portfolio update, including a new graphic. We're also going to be following up from last week's video, talking about some non-financial targets and a revamped format for this video. And I'm also going to explain why the NFL sort of saved my portfolio from what otherwise would have been a really bad week for me. Let's do it. Alright, so in terms of portfolio performance, we're just going to do with any changes over the last week to start with. In terms of dividends, actually a pretty solid week. A lot of my dividends in July come really early. I'm actually only waiting, I think, for one more dividend for the rest of the month, which is going to be for MPW. And honestly, pretty good. All of these companies are just reinvested straight back in, as you can kind of see down here. So DLR, Huntsman, Digital Security. In terms of this ETF, I'll admit I don't really know much about digital security. I tried to invest in a single stock last year. It didn't really work out very well. And since then, I've just decided it's one of those areas where I don't have the technical competency to really understand, but I'm kind of pretty certain it's going to be necessary in the future, and therefore it's one of those areas where I want a kind of niche ETF to focus it, basically. Hollywood Bowl, by the way, I'm super happy buying at these prices. It's gone down quite a lot, so even though I'm still green, much less green than I have been in the past, and really it's just an extension of sort of the UK economy wobbles at the moment, really. I think this company is sort of throwing off money, even though the summer period is usually quieter for bowling alleys. I'm very happy to be buying at 240, even though my buy price is 220 as an average, and I'm just going to be averaging up. I think the share price should be sort of about 50% higher. So why wouldn't I be? Maybe more like 40% higher, but still, it's a very easy reinvestment for me. Even though there are other areas in my portfolio that are red, for me, it's no bad thing, and it's something that I think as an investor it can be quite hard to average up when you're green on a position. But I think it's really important that you do if you have conviction in it. And SMT just reinvested likewise, honestly. So that's fine. You might recall if you watched my video last week that my Dutch focused ETF, the dividend came super late, so I didn't have a chance to buy, but this week I did, so great. And then just really a single move where I sort of sold out of my Canadian exposure. I do have one share left, but I sold the majority of it. And I've touched on this beforehand, but it seems to be trading in a fairly narrow band at the moment. So I'm just kind of like skimming, almost like swing trading it if I see an opportunity elsewhere. And this time I decided to take 3% profit over the last few weeks or so and put it into my emerging markets ETF. So I think there's a sort of a 10% discount against the NAV for this ETF. And I sort of want a bit more emerging markets exposure anyway. So I decided to basically move that across. So they're all the actions that I've done this week. In terms of our dashboard, we'll start with our week-on-week summaries. So you can see there quite quickly. I did lose 1,000 week-on-week. That's all unrealized. I didn't do any selling outside of the Canadian position, and dividends increased quite significantly, actually, like over £100 in the week, and that just puts my P&L in that position. It might also be worth just explaining. I probably didn't do a good job of explaining last week, but in case anyone's interested here, where I sold my polymetal position last week, it caused a situation where my realized P&L basically decreased quite a lot because it was a $5,500 hit. But actually, my unrealized position kind of improved as a result, right? Because it's now been realized. It's no longer sitting as a big red line in my portfolio, my active portfolio. And therefore my unrealized position actually improved quite substantially as a result. So funny the way that these things work. If we go straight to the top, honestly, it's been a kind of challenging week, but I feel really positive about it because even though I sort of tracked the S&P broadly and I remained slightly behind it, the UK stock market was so bad and the currency movements were again just not very favourable at all that I was just really happy to sort of be more or less keeping up with the S&P, which is still kind of firing and is being sort of supported with a tech rally. So yeah, I'm actually really happy with the resilience of my portfolio. And to be fair, I don't even know if it's necessarily right to term it that way. I'm very happy with the resilience of a handful of stocks that are absolutely carrying my portfolio at the moment, because a lot of my UK positions did get really battered and have been being battered actually over the last couple of weeks. If we just scroll down, it might be a little bit clearer to see here in the sort of profit over time graph. And because I separate out my UK and US listed, you can kind of see here my UK in the light blue is still sort of in the negative, not helped by the couple of Russian miners that were UK listed. Whereas, my US position is sort of nearing all-time highs, not quite at the level in February, but not too far off either. So, like, the US positions are definitely carrying more than the UK ones at the moment. So that's interesting to see. I do think that there is a lot of value to be had in the UK stock market, but there's just not very positive sentiment at all. And to be honest, I think the only thing that's making the pound as strong as it is the expectation that the Bank of England needs to raise base rates. And I think really it's a little bit disconnected from reality. And as soon as sort of inflation stabilizes in the UK, I think the pound is more or less gonna crash sort of 5 to 10% in a relatively short period of time. So I mean a relative term crash, but for the the pound dollar pairing that matters a lot for my portfolio, it's actually quite significant when you consider I have sort of 70 grand in US held stocks. So at the moment it's basically not favourable the direction of travel. In terms then of performances this week, so the big loss was basically anything to do with semiconductors. So AMKR and ASML both got beaten up. ASML is a lot less significant than AMKR. I mentioned the week beforehand that actually if I was swing trading, I might have been tempted to sell a little bit in AMKR at kind of 30. But I didn't, and that's okay. I still kind of have long-term aspirations for this company, but it did get beaten up. So it had been back into first place last week, and now it slid back down into second again. Actually, though, the big positive and the reason for the thumbnail is that Genius Sports this week was up sort of over 20%. And actually on the day, on Thursday, when the news broke that it had extended its relationship with the NFL, it actually went up like 30% because it had been drifting downward in the first half of the week. So I've spoken about Genius a reasonable amount, but I think the reason why this mattered is it's just so significant. And although it does see a very small dilution of sort of a couple of percent because the NFL basically increased their ownership and buy a few million more shares in Genius, it's just so important. Like it's their sort of marquee relationship. They make a lot of money through it, a revenue specifically at the moment through it. And it sort of it gives them that legitimacy. I think as well the fact that like the NFL is now owning a little bit more of Genius means that they have even less reason to leave them, right? Genius is exclusive. It's sort of 98% of all bets go through them that are placed on the NFL, so basically own the market. And I mean, it's really building itself a very strong moat in essence. So yeah, the stock market reacted really positively. I did actually consider selling about 10% of my shares. The reason is because although I have like 2,211 shares, they're split across two portfolios. So 211 in a non-tax advantaged account and the other 2,000 in my ISA. So I did think about selling 10% because I think after that jump, the share price is basically up with results. I would even argue slightly ahead at the moment, although they are due to update their results very shortly. So we'll see how they look. But yeah, this was basically just more of the same. And by more of the same, I mean, it's just a business that just keeps on delivering and has been for like 18 months since they had their investor day. It was interesting that on the last earnings call, the analysts started to ask about this specifically, like they'd been thinking about 2024 when the original agreement was due to come to an end. This is basically a 3-year extension on top of that, or a 4-year extension from today, as well as sort of expanding the nature of the relationship to now include sort of betting integrity, monitoring and things like that as well. So it's basically a much longer extended relationship as well as a deeper relationship. So for me, it's really positive. We'll see how that develops over time, but market basically loved it. And I think it's sort of removed one of the final worries with Genius sort of as it looks to turn profitable, that this was sort of on the horizon. So yeah, the market reacted really positively. I have seen some earnings upgrades even before this that have Genius in sort of the $8 to $9 range. Again, I want to see the updated results first before I get too excited. Like I think I did overpay for this in the past when I was paying like $8 for it. But I'm now only inverted commas down about 10% on my position in Genius. So hopefully here I'll turn profitable pretty soon. Again, I accept in hindsight I overpaid for this, but I think it was good that I didn't compound the mistake by selling in January last year when I was considering taking a haircut of like a 70% loss. So that was really what came to the defense of my portfolio there with the NFL. By the way, for anyone who's interested, the reason why I picked Jacksonville in terms of my Screenshot thumbnail was just because I've seen them play a couple of times. Right, I'm London based and they kind of played over here a couple of times. I'm also quite optimistic for their team rebuild relatively recently as well. I don't think they're going to be winning the Super Bowl anytime soon, but still, I can't be accused of being a sort of glory hunter if I go with the Jags. So we will see. I do also have a bit of a soft spot for the Packers. And one or two other teams as well. But I think the Jags, just because I've seen them and they were sort of the first team I saw and really got invested in, have got that kind of place in my heart there. So, yeah, it wasn't really anything that Genius themselves did, other than obviously securing this. But it was that NFL extension of the agreement that really mattered. You can see, by the way, that a lot of my other positions are sort of negative between sort of 1% and 3%, so not quite enough to turn red or green, which is plus or minus 5%, but generally a sort of challenging week for many of my positions here. So, yeah, I think overall, yeah, feeling relatively positive, but only because of the fact that I'm keeping up with the S&P just about, and that's despite some real challenges with half my portfolio, either with the FX for my US holdings or from my UK positions, which has also been quite badly beaten up. Luckily, in fairness with you, Games Workshop at least is holding up really well and seems to have stabilized in sort of the 105 to 110. My opinion here is that the fair price of this is somewhere between 115 and 125, but I wouldn't really be buying Games Workshop at the moment because I think there are other opportunities in the UK market, although I do think it's an insanely good company from a financial perspective. So maybe if you sort of take a long-term view. I did just want to share one other thing as well, or maybe two other things. First of all, my July figure here for dividends off to a really good start, but as I touched on, that's really only because of timing. And literally next week will be my final dividend of the month, which will be, I think, an £80 one for MPW, which is absolutely just going to be reinvested. And then I also just wanted to share this, which I spent sort of an hour and a half working on. But this is sort of a heat map similar to what you get like FinViz, if anyone monitors that from an S&P 500. Now, in fairness, I think I can build this a little bit better, and this is going to be my first version, but it's quite fiddly to set up because you basically create hierarchy within the base table. So yeah, I think at the moment I can probably improve this a little bit. But what I basically did is divided my portfolio into types, where each position was basically either given as a unique position, unique share, or whether it was part of a ETF. So here, basically, in this sort of left column, you're looking at single shares in the US, so AMKR, Genius, and then etc. by size. Again, I wonder here if I could put the ticker just to make this a little bit easier to read. Some of the smaller boxes like this one are a bit of an eye chart. But for now, I've just put the full name anyway, and this is weighted by revenue and updates in real time, so that's cool. And in similar single shares in the UK, so Gamma and then everyone else, Games Workshop, etc. Then ETS in the US. So this one's a bit more interesting because at the moment, like when I talk about my US and my UK holdings, that's really like the positions where they're listed. But actually, I thought it would also be interesting to look at where the ETFs have their exposure. So like for Scottish Mortgage, for example, there's something like 70% US. For things like the S&P small cap, obviously that's US. Similar for things like Allianz with Scottish Mortgage. It's like, yeah, it's a UK listed fund, but actually it's US based. And by the way, I know these aren't ETFs. I've had like a few people correct me. It's just I know they're funds rather than ETFs, but you know, a collection of shares I think is fine. So we're just going to group them all as ETFs from this perspective. Then there are some more interesting ones as well. Like if I go down to my Australian holding here, right, in ETF, this is actually my VanEck Global Mining ETF. Again, this is registered in UK. So it will be in my UK number from the graph above. But actually, it has a very slightly larger position in Australian companies than it does in Chinese companies. And therefore, I listed this as Australia. Some of these are less contentious. Obviously, ASML is Dutch. Yeah, the ETS in the UK here as well. These are very UK focused. BlackRock, Frog Morton, as well as Fidelity Special Services, Special Values, sorry. And then a few others outside of that as well, like my ETF for the Netherlands here is clearly that. Evraz I decided to put to Russia as a single share. And then there's one or two others which are kind of interesting in here as well. But yeah, so I might have a little bit of a play with this. The other cool thing is I can just zoom in. So there you go. So I can actually just have a look at the single share positions in the US and then go back as well. So I can potentially change the way that this is organized, and I might have a little bit of a play around in terms of how that works as well, because I think I can basically introduce additional levels to potentially change the way that this is viewed. So again, I don't expect I'd need to look at this too often, but I think actually understanding where I'm exposed, where I'm geographically exposed, is kind of interesting, where rather than just where my shares are listed, basically, which is a little bit different, especially because a lot of the UK positions are funds that have exposure to elsewhere. You could, of course, take this even further, right? Like some of these companies have non-UK focused exposure, but I think it's fine to sort of on the whole to talk about single shares as where they're listed, even though say Huntsman Corporation is making a third of their sales in Europe and a third in Asia and etc. I don't think we need to go down to that degree. It's more interesting though to split out the ETFs in terms of where they're focused. So that was fun to design this, and actually once you get your head around how this actually works, it's not too bad, but you do have to set it up. It's quite finicky to set up, and therefore I might come back with a version 2 or 3 in a week or two. But that's everything in terms of the portfolio update for this week. So let's have a look at our non-financial objectives next. Okay, so this is still kind of a work in progress, but I like the way it's shaping up at the moment. So these are my targets basically that are non-financial. For anyone who didn't see my video last week, I was kind of a bit disappointed in how I've done with my non-financial objectives compared to my, financial ones. So I've decided to revisit this and see if I can improve the situation. So this is what we're going to go through each week. I'm going to do this, I think, in the latter half of my videos. For anyone who's not really interested in this side of my videos, I totally get it. I think most people and subscribers would be more interested in my portfolio. But again, I think because I'm doing these videos for my own benefit in the long term, it's important that I have these sessions so that I can, beat myself up if I've been underperforming, essentially, to keep me honest. So in terms of contribution to wealth, just a modest change week on week, which is that my wife's pension contribution went in. So this is her private pension with her employer. So that's the jump there. This is part of our target to contribute 70,000 a year. So we're actually doing really well on this objective at the moment. So that's great. In terms of our total wealth, it actually went down week on week. That's really because of two things. First of all, the end of the month figure included both of our wages. And then since then, we've had all of our monthly costs like mortgage and nursery and other such things. And actually the stock market hasn't been particularly good either. So those two things mean that has fallen, kind of to be expected, to be honest with you. And also last month was especially good, but it is what it is. Our target, fat fingers there, sorry. Our target here of 500k, that's basically our next major target. Eventually we hope to have a target here of 5 million, but that's sort of 2 decades away. So for me, it doesn't make a ton of sense to be looking that far ahead for weekly videos. Outside of that, I actually decided to break down sort of some key areas into some smaller parts. So one of them was outstanding at work. I touched on this beforehand, but before I had my daughter, I was regularly doing a great job at work, basically getting like the highest achievements, objectives, bonuses, those kind of things. And then over the last couple of years, I guess because of family distractions, but actually just called being a dad, my sort of performance slipped, and I still kind of was mostly good, but I think I'd like to get back to outstanding. So I put a couple of things here. Now, some of these I can't really discuss the targets because I consider them sort of sensitive, and talking about them would be probably inappropriate. But I do know them, so I think we can still talk about them without kind of going into the specifics of an actual target in terms of, the revenue figures or the actual specifics of the target. So first of all, basically part of the reason why I joined this company is because they're updating their billing and payment systems, both of which fall under me. So my area is now signed off. Hopefully the system will be going live in July. The system is so much better than what we have at the moment that I can't wait for it to go live, and it will basically enable lots more stuff from it. So this is phase 1, basically system go live, new customers, etc. And then phase 2 is actually migrating existing customers onto it, which is going to be a couple of months away still. So again, this is kind of, it doesn't make sense to talk about phase 2 yet, but phase 1 is the next part here. And once this is live, then we'll update it to phase 2, etc. Next up, we've got revenue assurance, which is in my area as well, and is very much a new thing for my employer to be doing. But actually, like at the start of the year, me, the lady in charge of the team, and my boss, who's the CFO, we sort of privately agreed a figure, but we were so much like finger in the air that we didn't really feel comfortable kind of going to the wider business to talk about it. Anyway, partly because I think the lady's doing a great job, and also partly because there's so many low-hanging fruits. We're significantly ahead of schedule at the moment, and we're probably going to smash our sort of private objective. But yeah, it's going really well. I agreed a H2 plan with said lady, and we continue to work toward it. So we're going to sort of update on this. Probably the end of August will be the next major updates. But until then, work's going to be happening, etc. So we'll just touch on it each week. PTC here is traditionally propensity to call. This is like a key part of my job, I suppose, that I've done in several jobs now. It's really kind of a cost reduction. Like as you scale a telecoms company, you will inevitably end up with a higher, number of calls. PTC can also mean like propensity to contact, propensity to call, propensity to churn, propensity to complain. It's kind of a multi-purpose thing. But it's essentially like each one of those actions has a cost to the business, and obviously as a business you want to minimize those costs. So there's a big work stream going on at the moment around that. I'm involved, as is most of the business, in their various areas as well. So here, it started basically. I've got a new person in my team who's going to be sort of leading this in the future, and it just needs an update basically, and I'm hoping this person is going to make it look a bit more professional, because actually they're really good at this kind of processy stuff. So that should be good as well. Next up is team organization. I'm not quite sure whether this is going to stay forever, but it was very much important, and it's basically taken me sort of 6 to 9 months to get the team to where it needs to be in terms of the structure, the people, etc. My final recruitment is occurring on the 18th of July when that person will be starting, and then it essentially completes it. Here though, I do expect to sort of, I'm already talking about 2024 budget and what that's going to look like, and dealing with a few new third parties, that kind of stuff. So I think this is kind of like structure and getting the people and the support in place to deliver what I need to do. And then this here is end-to-end data reporting overhaul. I would say at the moment that it's difficult for my area, as well as kind of broader finance, to act as smartly as you would want. And I'm hoping that as we get this new systems, and now that I have my team and other such benefits as well, that we're basically going to have a really good understanding of the data. There's a couple of key reports that I would like to build and work toward, that I think will basically be a significant benefit. And literally this week I kicked it off with my payments manager, and we're basically going to be he's kind of the end of this process, and I've sort of asked him to lead it, so that should be good fun. Outside of work now, we're on to fitness and well-being, which I decided to group together. So I got feedback on my last video, and yeah, it was actually quite nice feedback from a number of people, so thank you for that. And somebody suggested basically that my 100 kilogram bench press goal was a little bit like arbitrary, and that actually would be better to work this through in terms of a process. I think that had a lot of benefit. So here instead I'm going to do twice a week, attend gym twice a week, and then we're going to assess how well we're doing at the end of the month. This is probably going to be a rolling month, honestly. I just managed a one session over the last week. It was okay. It was only a 30-minute session at home. I did also do a second session, but it was really just more of a stretching and kind of trying to make myself feel okay kind of session, but still kind of not great. And again, hopefully here, I think I kind of need to get into a routine. So one of my next things is going to be to talk with my wife and see if we can get a more regular sort of cadence going, where again, we have to kind of juggle it around each other's work commitments and childcare and everything else as well, so it's not quite so easy. But yeah, we'll try and see how we go. Also as well, I've been considering going quite late. My gym sort of is only closed sort of 1 till 5, so I could go at like 5 a.m. or very late at night. But then, as you'll see in a second, it feeds into one of my other objectives, which is to actually sleep more. I'm doing this video at literally 10 to 3 in the morning, and it's just my sleep at the moment could definitely be a lot better as well. On top of that, I'd like to reduce my weight. I've been sort of hovering between about 103 and 108 kilograms for honestly several years now. When I get to 108, I feel particularly unhealthy, and it tends to spur me into getting a bit healthier. But then as soon as I sort of start looking okay again, I sort of slip a little bit. So again, I'm hoping that this is partly a lack of discipline, where if I could get into a routine and was a bit more tough with myself, that I could bring this down. So my target in the short term here is 100 kilograms by Christmas. I think that's reasonable. I actually think it's not particularly ambitious, but I guess I'd rather not keep failing in my weight loss. And to be honest with you, I think I am meant to be quite big. I've got quite big shoulders, for example, but obviously I probably should be more like 90 if I was actually in good shape rather than plus 100. So to me, I'm probably about 20% bigger than I should be. Is my sort of expectation. And yeah, that's the direction of travel. So I thought about sort of how I would do this, but I guess, and again, 100 kilograms in a way is completely arbitrary as well. I'm just probably going to reduce this in 5k increments at least to start with, as in 5 kilogram increments at least to start with, and reassess. And I'm kind of hoping here, between the gym, trying to eat a little bit better as well as part of that, and actually looking after myself against sleep. I noticed this weird thing where if I sleep well the night before, I actually weigh less in the morning. I don't know if this is common, but it's strange because it's very clear in the sort of data, I guess. So yes, I'm hoping that this kind of takes care of itself in a way, but actually I also think I could be a bit more disciplined here as well. And then more generally here, I've taught this like taking care of myself, which is really broad. And by this, I just mean sort of like, making sure that I'm like sleeping well, that I'm sort of, not skipping, I know, like nighttime teeth brushing, that kind of thing. Like that can sometimes be a bit lax, especially if I'm like procrastinating on the sofa, right? I did do a little bit of research, so through YouTube, and I decided to actually spend like 35 quid on a couple of skincare products, which for me is like a bit of a weird thing because I think I'm quite old school as a bloke, and I've literally never had any skincare stuff before. But I feel a bit like oily and greasy, and like I'm a sweaty man, especially at the moment in summer. So I decided that actually maybe it was about time. As I'm 36 now, I should probably start taking care of myself a little bit more. So I decided that this would be my sort of very shallow dip into that. So I'll let you know how that goes when the stuff arrives. But I did actually buy it. I spent a couple of hours actually like researching what the right things were, learned all about like salicylic acids and various other stuffs as well. So yeah, we've got a couple of things coming next week. We shall see how that goes anyway. I'm somewhat skeptical. My wife normally kind of nudges me to take care of myself healthcare wise, so hopefully this will show a little bit of initiative. I guess that's a nice segue because now we're on to relationships. And again, I decided to group these and expand it a little bit. Like, I'm not particularly a fuzzy relationship kind of person. I find socializing quite tiring, frankly. Although my wife thinks I'm really good at it just because I can be quite adaptable and kind of a bit of a chameleon when it comes to social interactions. But I do find it tiring. It's not something that naturally comes to me and I have to kind of force myself to do it. So we'll start with wife and daughter. Honestly, a pretty good week. And I mentioned last week that this is kind of something that I'm really pleased with. Like my wife, especially, and me, we spent the first couple of years after Aurelia was born, our daughter, really focusing on her and sort of probably neglecting each other a little bit, to be honest. And then we had a bit of a heart-to-heart probably about a year ago, sort of 6 to 12 months ago. And we were like, right, this is what we need. This is what we should be doing. And since then, honestly, I feel like in a really great place with my immediate family. Didn't do anything like particularly a call out with my wife, although I would say that on Monday morning, which is always a really busy time for me, so I managed to find an hour to go with my wife and daughter to her future school, which is going to be starting in September. So that's super exciting, actually. I love those big milestones as a dad. And yeah, really pleased. I actually chose the school for my daughter. I just consider education so important that I sort of take the lead on it. So I'm really pleased with my choice. I think it's a great school and I'm looking forward to her starting there. I also took Wednesday off for my daughter's inset day. She currently attends nursery. Me and my wife basically take turns in terms of who covers each inset day. And I went down to my where I was born and where a couple of my sisters live and basically had a day out with my daughter. We also went to a big play area down there and basically just ran her into the ground. So she was absolutely knackered, which is just what I wanted. But that was nice. And then again, a nice segue there. So Jenny is one of my sisters. She came to visit with her family. Two of my three sisters are actually in the kind of LGBT umbrella. So we went to a Pride Day in London on Saturday. And that was good fun. Honestly, I was a bit skeptical because, you see these scenes and I thought it might be a bit in your face. But it was a good parade and enjoyable, and everyone seemed to have a good time, so that was cool. And then on Wednesday, I visited Jenny again in Farnborough, and had a good time down there as well. So I thought friends and connections here. Again, I'm really poor at kind of managing my regular contacts with friends. I'm just not really that kind of bloke who regularly sees people, but I should make a bit more of an effort because actually the connections that I have kept in touch with are people that I do want to keep in touch with. if I think of like James or Christoph or again, I literally could count the number of friends I have on like one hand, so I should probably make more of an effort to keep in touch with them, because if they've made it this far, then it's because I really like them basically, and I think they're good people. So I haven't done anything specific on this point, but it's there as a reminder. Similarly, as well, with professional, I would say this is something I haven't really done a great job with over the last couple of years. In my 20s, I was a bit of a kind of career fiend. I sort of really built networks very quickly and scaled, progressed in my career very quickly as well. And again, this is something I need to get back on top of, not because my career isn't going well or anything else, and I'm really enjoying my current employer. But just for the future, I do such a niche thing now that it never hurts to have contacts. And almost out of the blue, actually, a guy called Martin, who actually got me a job a couple of jobs ago, reached out to me and was sort of like, how are things, etc., etc. And he also sort of, we had a general catch up basically, so that was good. And yeah, I just think I need to sort of, update things and make sure that everything is up to date, and I can be approachable in terms of contact numbers and things like that. So just for something to think about for the future. And then in terms of more general, what I've termed development here. So this is kind of almost like mental development or mental well-being. Personal development in some way, which is slightly different, I think, to the fitness and well-being, which is more like health, whereas this is sort of mental development. I guess I don't know. I feel like there's a clear difference. Maybe I'm not doing a great job explaining it though. So regular YouTube videos, again, once a week. I probably shouldn't be doing it at 3 a.m. on a Saturday night. And I also, like, from the data that I've seen from YouTube, like, it's very clear to me that actually if I do the video on Friday so it's ready to go on Saturday morning, it actually gets much better viewerships. It's just a little bit challenging with life to do it in that slot. So again, that's probably something I should talk to my wife about and maybe try and schedule it a bit better. Studying Polish here, so I updated this point. I think 2 hours a week is quite a good target. I've even got like reading materials and books and like learning materials, etc. So from previous like formal teaching. So I haven't organised anything formal yet, although quite randomly my wife was coming home on Tuesday evening and was like speaking to my daughter in Polish, and we basically just continued having a little bit of a conversation in Polish, so that was good. My conversational skills in Polish, especially around certain areas like food, is quite solid, and the understanding is also quite solid. It's just when it deviates a little bit, I need to like switch back into English, but it was still good to sort of warm up my ears a little bit. Published a story here. I've spoken about that before, but basically, I've kind of got a couple of drafts where I literally just give my daughter a story when I put her to sleep. I just make one up basically. She quite likes them. She basically gives me a topic and I have to make up a story. So it's good fun. But I'd like to publish here. I think by the end of September is hopefully a reasonable target to sort of have something ready to go. I probably need to be a bit more precise in this target if I'm honest. But I mean, the original target is to get something published by the end of the year. But I'd basically like to have something where I've got the exact context, the exact pictures, and kind of I'm just sort of in the process of maybe understanding how to publish it. That I think is really the target here for the end of September. And then regular reading, I've just put work in progress here in terms of target. I think my aspiration is to basically do 5 to 6 books a year, and then to do a YouTube video basically explaining, how I found the video, the book, what I learned from it, whether I'd recommend it, that kind of stuff. So we'll see. I think I need to work on the target here, and I'm actually quite happy with my reading overall. Like I've almost completed my 3rd book this year. I do tons of reading in terms of The New Scientist and like a philosophy magazine as well, and I read typically 1 to 2 newspapers a day. I live in London, so I get access to free newspapers. So I do a lot of reading. It's just a case of could I be a bit more constructive and targeted with the reading. So this is my dashboard. I won't always spend 20 minutes going through this each week, but this is what we're going to touch on a weekly basis from now on. So yeah, that's wraps up everything for now. Any questions, etc., I will always welcome them and hopefully give feedback. But otherwise, that's everything for this week. Thank you very much.